Hi, it's David here with Futures Trading. We're going to take a look at the NQ as well as the ES. So I plan to bring that YM back at some point because I haven't covered that in a while. I took a look at some stocks and of course some pairs, but they're just not doing well at the moment. But I'll try to cover some of them hopefully by the end of this week to give you guys something else to look at. But before doing so, I want to make sure that I express to you, please be safe online. Don't let anyone confuse you about what's happening with these markets. Of course, there's already a fellow out here who's trying to copy my content. And I'll express to you what that is because we need to actually look at it while looking at this NQ and the ES. I'll express to you what it is, but you're more than welcome to go take a look at that information. I'm not going to, highlight too much on that, but you're more than welcome to take a look at that information should you need to, because I don't want you to see this individual and of course get deceived by what it is that they're promoting. They're using even some of my terminology out of context. And so they don't even know some of the things that they're saying and its rightful place to say it. They have no idea. And of course, I have no problem with anyone profiting from the stuff that I release because that's the goal to make sure that you profit immediately. But when you go and try to adapt my approach to markets and try to make them your own, you're checking a lot of those boxes that I told you guys. Now that's in the must watch list. You can go take a look at it, and I'll show you where it's at. It's even in this 10 skills of mastering trading, but I'll show it to you here. You can go in here and you can definitely take a look at those 10 reasons a full-time trader knows you are not one. And this individual is checking so many boxes. I mean, absolutely. Definitely with all the flashing of what they've made in the last month, and they've never and I combed through their information for a bit, and they've never posted anything about making any kind of money trading. None. And so within the last month, they've, of course, trying to highlight so much money they're making, and now they're ready to teach. Okay, so just be careful, and of course, I'll make sure that I'll do my best to create a safe space for you to learn. For all of those who's new, who's coming to the channel, my viewers as well as my subscribers and followers, I want to make sure you guys are safe when you're learning. I don't want you to go out here and be deceived by people, of course, doing the stuff that just doesn't need to be done. You don't have to put a whole lot of stuff on top of what it is that I teach in order to make sure that it's effective and understood. Now, you're more than welcome to come follow me on all of these other social networks here. I actually added a couple more over the weekend again, because I've already been up here before, but I'm gonna do it again. And I want to make sure you guys are able to stay in contact with futures trading and me. All right. So want to grow the community. So let's get right into it. I don't want to be before you long. Here's the NQ. Now, they're doing something a little different than the ES, and we're going to take a look at the ES. And I want to make sure that you can understand what it is that I'm promoting here. The static levels, that's one thing that I want you to take a look at. This bar here closed at 345.75. So they went right outside of that 45. And that's not good. But as you can see, we never closed outside of that 45. And so now, of course, they're trying to use this particular area as support. Now, the goal is for them to, of course, to go ahead and just keep going into the next static level, but they're regarding that. All right. So we got again the close here, 345.75. The static goes from 55 to 45 even. So they came within 3 ticks. But here's the thing that I really want you to grab here. This no close bar. Okay. Now remember, this high is below the midpoint of this bar. This midpoint is above this high. Want to make sure it's simple for you. All right. Now that's a no close price level. You can see that they kicked that turn. Okay, they kicked the turn, but they managed to get right back above that bar's low. Now, what is this low? 357.75. So be careful when you're using this particular price action method. I don't know if I stressed that to you from the beginning, but sometimes they can kick that stop. I believe I did, but I can't recall which video it was. But sometimes they can kick that stop and still come back in and close right back above that price level. So just make sure you keep your eye on that particular aspect of using it. Now they doing something a little different here on the NQ than the ES, and so we'll count it out: 1, 2, 3, 4, 5. This is 6 because they managed to close right above there. So that's 6. They only got one more to go. I went on and projected it a bit, and then I threw it back. Now here's the interesting thing. Here's the thing I'm sure I'm sure people are really, again, just going to be taken at the idea of how this fellow is trying to take this information and trying to make it his own. This chart scale method, I am the pioneer of it. I put it online, and trust me, I'm protected with what it is that I release online because I got videos dating back for years that I've been teaching this stuff, and so it's really important. But this pioneer method, okay, it's content that of course, I'm the first one that ever done it. Okay, and there's another way to use this chart scale too. I just can't release it to the public, but I am the one, the only one, the first one, the first one I'll say that go about markets this way. And so you don't need, you know, you don't need horizontal lines and some trend line across the top of the candles that's projected, here with some bubble. You don't need that mess. It's all it is really simple. Here's the center of the scale, and you just zone it out with the static. Just zone it out for the most part because there's a good chance, and trust me, I've done my homework for years, and there's a good chance a static would be somewhere in the center of this, in the center of the scale, and they'll roll away from it for the most part. Now, here's the lower half of the scale, and so you don't need go up on a 4 hour time frame, find three times where the price then hit. You don't need all of that stuff, people. Here's the lower part of the scale, the lower part of the scale, okay, in this time frame right here. If they lean back, hopefully they'll land right about here and then take right back off. Now, I don't like the way they've climbed. I don't like it. I'm gonna be honest. There's some stuff going on this climb that I just don't care for. But it's not to say that they can't try to climb more. I just see that they're trapping. This is, I mean, they did the trend here and did the trend distance and then trapped. This could be reminiscent of that same kind of activity here. Now, if they are to make this trend distance, which I suppose that close would be somewhere up here, if they decide to do one more, and that would put them roughly here. Or if they decide to lean, I hope they don't lean back to. Let's just leave that there. I hope they don't lean back past this zone. If they do that, I would be really, really cautious about whether or not they'll stay up because then that'll fall beneath this lower half of the chart, the lower half of the chart. Okay, so there's some statics for you to try to keep you in this direction. All right, so don't want to see them back down here at this mid. Just don't want to see that again because if they do, that falls against what it is that needs to happen. The minute that they get under this lower half, they may take a dive. All right, so center of the chart here. Here's the lower half of the chart. No higher time frames needed for a bunch of I guess tags on the bottom of this lower half. Don't need all of that. Just here's the lower half, center of the chart, and here's the upper part of the chart. If they can clear this static, we would flip it upside down, and so then we will go from 55. Okay, so we will go from 55 down to 45, 450. So we would come down into here. So if they climb up, above 55, hopefully that again, that 450, which is roughly here, which is right about the halfway point of the chart, this may be the beginning of demand for it to roll to the upside. But I don't trust this lift. There's things that's happening with this lift. I don't like it. All right. So, but I will say again, if they want to get it done, hopefully they just won't trap. Here's the mid. Hopefully they can definitely get past this, and that may show some intent. But remember, I told you, they can, probably remove this. Just don't get past here. All right. So, and as you can see, this is just slightly above this zone. So just be careful with that. Now let's look at that ES. Really simple stuff. All right. So it's kind of the same thing here going on. It's really simple, but here the ES is just doing something a little different. I do not do market correlation at all. I only trade the instrument that I trade. I don't look at other stuff to compare the two. But if you want to, I'll slide it to the side and you can look at them side by side. Totally up to you. But this is the ES. You can see it in the upper left hand corner there. I'll sit them side by side and you're more than welcome to take a look at them both. All right. So here you got 1, 2, 3, 4, 5. That's 6, and there's your trend distance. Now, I tried to give you that projection because this bar pushed down first into this range, and then they're on their way up. And so they're almost there, and that'll land them right here at the mid. That'll land them right there at the mid of this reversal. All right. So this turn, it's not bad. It's not bad at all, actually. This is the center of the chart, people. Again, no higher time frames needed. You don't have to have some trend line on the top of the candles and it's going to project somewhere. It's really simple. Here's the upper half of the chart, and there's the the mid of it. That's all. Here's the mid. You can go right there with that mid. Here's the lower half of the chart. Hopefully they can stay up. They've been doing the no close. Well, they did no close here and back here with this bar because this bar is high. I'll move this out the way so you can see it. Oh, no, actually, it's this green one. I thought that was the one. This bar is high here. The green bar here, high is below that mid there. And so that's the no close bar. And you can tell they shot under it, didn't close, and they did it twice. And then, of course, they took off to the upside there. Now, I'll just sit this here. Matter of fact, I'll just sit this here. So, yeah, that's the trend distance. Now, on the way, too, it's consecutive close on the way as well and rejected twice. You're getting kind of all of those patterns kind of falling into this where they're hitting the close of the bar. So here, this is the close that's rejected twice. One, two, this bar hit that close twice and rejected it. That's a hard stop there. And so while this bar is coming back up, you have another reason to go ahead and have your stop there. All right. So and yeah, you can go with the outside bar if that's your traditional way of going about it. But of course, here's another way of looking at it that can confirm its direction. There's one, there's two, and it kept going. This one, it kind of tagged it, I believe, three times. That's one, two. And so you kind of get a little bit more movement there. Now, that's again another pattern that I released on the channel here. All right, so the trading guide, we got the consecutive method. So those price patterns, they're here. You can take a look at that. And then we got the rejected twice method, just some more information that it can provide you. So when the candle is testing and playing with you, you'll know what's going on. Now, if you're dealing with that overlap, now this is the other thing I want to tell you, and I made sure I mentioned this before, and you can find it here. It's real simple stuff. I'm trying to make sure you guys can view the markets very objectively. Let me see, where is it at? I'll try to find it for you. TikTok, I apologize that I'm not able to comb through all those videos there. They're very organized. YouTube allowed me to organize them a little bit. So, chop versus trend, this gives you an opportunity to know what kind of conditions you're dealing with. So, if that mid is falling into the prior candle, so if this mid is inside this candle, you're kind of getting chopped around, at least on the smaller time frame. Now, they may expand the range as they move up, but you're going to get a lot of back and forth. Okay, you're going to get them big wicks and all that. So, just know that. Now, hopefully they can take out this mid. I do suspect that they can get there. Again, this one is not looking as bad. Do forgive me. Hold on just one second. All right, so I'm back. Do forgive me for that. Now, so yeah, I do suspect that they can get there. Again, this is already, set for a trend. This one is on its way, and yeah, if they get there, hopefully they can just again keep it up. But if not, they may come to the center of here, and then of course may do a little wiggling and hopefully get on its way. But the ES again, not looking bad at all as far as the turn itself. Not looking too bad. We'll just have to see again if they can get up above here and get on its way. Now, let me show you what's below. Let me show you what's below here on the daily. I'm gonna show you what's below on the daily with the NQ, and then I'll be gone. So now on tomorrow, we need to go ahead and get to it. If this is going to be the case, I don't like what they're doing, but if this is going to be the case, we need to get to it. And I mean, really, really climb and go ahead and get to it. If they begin to stall out, and again, that's their zone, that's that same zone here on the hourly. If they begin to stall out, we got a couple more zones down here below. If they get down here, that will not be favorable. I'm gonna just tell you right now, because then of course that's one, that's two, that's three, that's four, five, and there's six. So if they give you one more, that's setting a trend in this direction, and that won't be good. That will not be good. Just want to make sure that you're aware of that. Now, yeah, so that should I just want to thank for just one second to see if there's anything that I'm forgetting to tell you. I don't want you to be caught off guard by what's happening. So yeah, so that should cover it. All right. So if you want to join me on any of the other social networks, you're more than welcome to do so. Again, I made just a couple of more connections here, so you guys can, of course, reach out in different ways to me, should you want to converse about what's here, or leave me a message below, and I appreciate that. And again, thank you for joining me. Thank you for watching the content, and I wish you all the best with your trading. Take care.